The markets are closed, but the business stories are just heating up. Hello, I'm Robert San. Catch up with us on Business Brief. Asian shares were mixed on Friday as investors pinned their hopes on weekend trade talks between China and the United States and the trade agreement between the U.S. and the United Kingdom. Top U.S. officials will meet with a high-level Chinese delegation this weekend in Switzerland, marking the first major dialogue between the two countries since President Donald Trump sparked a trade war by imposing steep tariffs on imports. The U.S. and U.K. meanwhile agreed to lower some tariffs between the two countries. Japan's Nikkei 225 climbed more than 1%, while Australia's ASX 200 rose 0.54%. Hong Kong's Hang Seng is flat with an upward bias, and Taiwan's TAIEX led regional gains with nearly 2% increase. Indonesia's JKSE added 0.25%. In contrast, South Korea's Kospi slipped 0.10%, and India's Nifty dropped more than 1%. In the currency markets, the US dollar weakened against the Japanese yen and South Korean won, falling 0.29% respectively. It also slipped 0.14% against the Singapore dollar. Meanwhile, the greenback gained 0.28% against the Thai baht and flat with an upward bias versus the Hong Kong dollar. The Australian dollar, meanwhile, strengthened 0.11%. Gold rose 0.44%. Oil prices also climbed as West Texas Intermediate crude increased 0.60%. Brent crude added 0.57%, and Dubai crude surged more than 2%. In the cryptocurrency space, both Bitcoin and Ethereum rose by more than 1%. The United Kingdom finalized a breakthrough trade deal with wide-ranging implications for global markets and trading partners like the Philippines. U.S. President Donald Trump and British Prime Minister Keir Starmer agreed to impose a 10% baseline tariff on most UK goods entering the U.S. In exchange, the UK will slash tariffs on American products from 5.1% to 1.8% and provide greater market access to U.S. exporters. The White House also confirms that tariffs on the first 100,000 British-made vehicles imported to the U.S. each year will be cut to 10%. Any additional vehicles will still face a higher 25% duty. Trade analysts say the deal is a strategic win for both economies and could reshape supply chains amid a global wave of protectionism.
With this deal, the UK joins the United States in affirming that reciprocity and fairness is an essential and vital principle of international trade. The deal includes billions of dollars of increased market access for American exports, especially in agriculture, dramatically increasing access for American beef, ethanol, and virtually all of the products produced by our great farmers. And our Secretary, as you know, of Agriculture is here. Brooke, thank you very much for being here.
Thank you, sir.
You'll let the farmers know. In addition, the UK will reduce or eliminate numerous non-tariff barriers that unfairly discriminated against American products.
Bitcoin surges past the $100,000 mark for the first time since February as risk appetite returns on the back of a landmark US-UK trade deal. Analysts say the breakthrough agreement, coupled with stronger global equity markets, is reigniting interest in riskier assets, including cryptocurrencies. The world's most popular digital currency had slumped to $75,000 in April, pressured by the collapse of Libra, along with a wave of hacks and fraud investigations that shook investor confidence. But the tide appears to be turning, with new regulatory frameworks taking shape across the UK and European Union. Market watchers say the path toward more transparent, stable digital finance is taking shape, even as volatility remains a core feature. For emerging markets like the Philippines, the surge could spur fresh interest in digital investments, making it even more crucial for regulators to strike a balance between innovation, stability, and consumer protection. The United States plans to call for UN sanctions against vessels that transported coal and iron ore from North Korea to China. The British-based open source center reports it had tracked vessels that did this, a clear violation of UN sanctions. An expert from the open source center said the vessels tried to deceive authorities by presenting digital tracks to indicate they were in other countries when satellite imagery showed them being loaded with cargo in North Korea. China's deputy UN ambassador rejected the allegations.
It's clear from evidence presented today that Russia is cynically obstructing the Council on DPRK sanctions implementation in order to try to escape reproach for its own violations. Meanwhile, China insists that it fully implements the Council's resolutions, but we have just seen evidence of Chinese authorities looking the other way as PRC companies import DPRK coal and iron ore in violation of this Council's resolutions.
Goldman Sachs and the U.S. Federal Reserve cautions Trump's sweeping tariffs could drive prices up and weaken spending power. Goldman predicts core inflation to hit 3.8% by December, used car prices to jump 8.3%, and appliances to get more expensive by nearly 8%. Fed Chair Jerome Powell says the economic impact of new policies is still unclear, but warns that persistent hikes may slow growth and increase unemployment rates. The European Commission launches a public consultation targeting over $107 billion worth of imports from the United States. The bloc warns that retaliatory tariffs could follow if negotiations with Washington fail to produce a deal. The consultation covers a wide range of U.S. exports, including wine, frozen meat, aircraft, and cars. The Commission is also exploring new restrictions on nearly $5 billion worth of EU exports to the United States. Currently, the European Union faces 25% U.S. tariffs on steel, aluminum, and vehicles, plus a 10% baseline duty on most other exports. The 90-day tariff truce imposed by the U.S. is set to expire on July 8, leaving global markets on edge. Trade analysts say the escalating tensions could redirect U.S. and EU demand toward alternative exporters, potentially opening up opportunities for ASEAN markets like the Philippines, particularly in manufacturing, agri-processing, and electronics. Bill Gates pledges to donate $200 billion through his foundation by 2045, a massive commitment to fight disease, reduce poverty, and prevent millions of deaths worldwide. The Microsoft co-founder also announces his foundation will wind down by the end of 2045, aligning with its 25th anniversary this year and accelerating his long-stated plan to give away nearly all of his wealth. Gates says he doesn't want to be remembered for dying rich, but for making a meaningful impact on the world. He also took aim to fellow billionaire Elon Musk and criticized the U.S. government for cutting back on foreign aid, warning that slashes in funding could undo decades of progress in global health. Gates stresses that while philanthropy can help, government support remains crucial to addressing inequality and saving lives.
Polio is one where the Gates Foundation is significantly the biggest funder, but the U.S. government up till now has been the second biggest funder. We need them to rededicate themselves, or else that disease will spread back and again paralyze hundreds of thousands of children. You know, we're talking about tens of millions of lives that have been saved through these partnerships. And, you know, everybody should be excited about every single death we avoid.
We're taking a short break. The biggest business stories from around the country are up next. You're watching Business Brief. Back on Business Brief, investors tread with caution as political and market signals show no clear direction ahead of the midterm elections. Sujin Kim is on the line for the details. Go ahead, Sujin.
Robert, as the country approaches the midterm elections, investors are closely monitoring market signals and economic indicators for signs of stability and growth. According to Trading Edge Chief Investment Strategist Ron Acoba, trading volumes remain muted, with the PSEI struggling to break out of its recent range amid broad market uncertainty and mixed economic data. Average daily turnover remains around 800 million pesos, reflecting a cautious sentiment as investors await more definitive policy signals from the next administration. The peso's recent strength against the US dollar has provided some support, with the exchange rate falling back to the 55.5 to the 55.6 range, its lowest level since 2024. This currency strength is seen as a crucial factor in attracting foreign capital, which accounts for a significant portion of the Philippine market's daily inflows. However, the expected boost in consumer spending ahead of the elections has yet to materialize. The latest GDP figures released this week showed that first quarter growth failed to hit the anticipated targets, raising questions about the true impact of political spending on the economy. Analysts note that this could signal a slower economic recovery in the coming months, particularly if post-election policy uncertainty persists. Much will depend on the outcome of the elections, as the business environment will be shaped by the next administration's policy direction. Investors are closely watching to see if the winning candidates will be business-friendly or if the market will have to navigate an increasingly politicized landscape. According to Luna Securities President Francis Diaz, midterm elections also present a unique challenge, as they lack the same market-boosting impact of presidential votes. Historical data suggests that midterms tend to be more volatile, with markets experiencing greater uncertainty and less consistent upticks in investor confidence compared to national elections. Despite these challenges, analysts note that the recent peso appreciation and steady macroeconomic fundamentals could provide a buffer against external shocks, provided that the next administration can implement pro-business policies that support long-term growth. And those are latest updates from Quezon City. Back to you, Robert.
Thank you for that report, Sujin Kim. Meanwhile, Transportation Secretary Vince Bezison, together with officials, inspected NAIA Terminal 1 on Friday as part of the measures to prevent the fatal accident at the pre-departure area to happen again. Airport officials are now implementing a parallel drop-off so vehicles are not facing the entrance. Bezison also bears the government's plans to replace electronic gates for immigration, both for the arrival and departure areas. The transportation chief is also making the rounds in regional airports. On Thursday, Bezison inspected the Mactan Cebu International Airport. He wanted to make sure international safety standards are being followed. The DOTR says this is all part of President Marcos's push to make travel safer and more comfortable for passengers. The Philippine dollar reserves fall to $104.6 billion as of end April, the lowest level in 3 months, signaling tighter external buffers and global uncertainty. Data from the Bangko Sentral ng Pilipinas, or BSP, shows gross international reserves down nearly 2% from March's $106.7 billion. This is also the lowest level since January's $103.27 billion print. The BSP explains the decline reflects the national government's higher foreign debt payments. Reserves remain adequate, equivalent to 7.7 months worth of imports, still well above the IMF's comfort level. With global trade tensions rising and the peso strengthening, analysts say the BSP will need to balance reserve management with external stability, especially as markets anticipate rate cuts later this year. The Department of Trade and Industry vows targeted support for key sectors to boost market access and attract high-quality investments. Trade Secretary Cristina Roque says these initiatives are designed to ensure inclusive and sustainable economic growth. Roque describes the 5.4% GDP growth in the first quarter as a sign of the country's resilience, driven by strong consumer spending and industrial momentum. She also credits the latest expansion to the dedication of Filipino businesses and consumers who continue to power the economy despite global headwinds. The Asian Development Bank plans to lend an additional $4 billion to the Philippines to fund major infrastructure projects. The ADB says the loans will support flagship initiatives, including the Bataan-Cavite Interlink Bridge and the Laguna Lakeshore Reclamation Project. Last year, the Philippines received over $6 billion in loans, making it the second largest recipient of ADB financing. Overall, the multilateral lender has set aside up to $24 billion for the Philippines from 2024 to 2029, prioritizing connectivity, climate resilience, and sustainable urban development. Japan's Toyota slashes its profit outlook, projecting a 3.1 trillion yen or $21.6 billion net income for the current fiscal year. That's a sharp 35% drop from last year's record $33 billion profit, marking a potential turning point for the world's top car maker. Toyota says the decline is largely due to new vehicle tariffs imposed by U.S. President Donald Trump, a move that's expected to disrupt global auto supply chains and raise costs for export-driven economies. For emerging markets like the Philippines, a major auto importer and assembly hub, higher vehicle prices could hit consumer demand, delay fleet investments, and weigh on logistics-driven industries. Real estate firm Rojas and Company Incorporated will receive a total of nearly 10 billion pesos in cash and bonds as compensation from the Department of Agrarian Reform. This after more than 30 years of legal battle that stemmed from the expropriation of the DAR to its more than 1,000-hectare property in Cebu, Batangas. Under the Comprehensive Agrarian Reform Law and in line with the consolidated order issued by the agency last 2023. RCI says the compensation will be used to fund its operations, working capital requirements, expansion of its projects, and payments for its financial obligations. CIS Party List Representative Erwin Tulfo leads the latest senatorial preference survey conducted by social weather stations. Tulfo is followed by Senator Bongo and former Senate President Tito Soto. Lito Lapid and Ben Tulfo are statistically tied for 4th and 5th place. Others in the projected Magic 12 include Bato de la Rosa, Camille Villar, Bong Revilla, and Aimee Marcos. Just outside the winning circle are Manny Pacquiao and Willie Revillame. The survey was conducted from May 2 to 6. The results provide a snapshot of current voters' preferences ahead of the midterm elections, with implications for the makeup of the next Senate and its role in shaping economic and legislative priorities. Former Deputy Governor of the Bangko Sentral ng Pilipinas, or BSP, is appalled upon seeing the frontrunners in the latest SWS survey. Diwad Gunigundo, former Deputy Governor of the BSP, says many of the frontrunners are involved in extrajudicial killings, supported the Philippine Offshore Gaming Operators, or POGO, in the Senate, and agreed to defund the Philippine Health Insurance Corporation.
Some of them are also convicted of plunder, but were simply pardoned. And many of them have nothing to offer except their entertainment value. They act, they sing, and they dance. Our country, given its current condition, has the least need of this kind of candidates. We need candidates who have the integrity and honesty, those who have competence and ability, those with experience and track record in public policy. In addition, we need candidates who stand on righteousness and justice, those who would not tolerate, let's say, plunder in government, particularly in the case of Parmali during the time of the pandemic, and those who are also prepared to support the Philippines' claim of various territories in the West Philippine Sea.
Gunigundo also says he is not optimistic that the Philippine economy will reach the lower end of the government's growth target of 6 to 8%.
The issue is not about interest rate policy. The issue is about our ability to produce. The issue is about our ability to inspire confidence among our businessmen and even foreign investors. If we continue to suffer very low scores in terms of corruption index, governance, competitiveness, ease of doing business, we will not be able to have the resources, the ingredients, the elements for a more sustainable economic growth.
Philippine shares rebound to 6,400 level in the final trading day of the week. The PSE index ended higher by more than 1% to close at 6,458, finishing the day as the fourth best performer in Asia. Among sectoral indices, only mining and oil ended in the red, with holding firms rising the most at nearly 3%. Advancers outpaced decliners 105 to 84. Total value turnover reached 7.9 billion pesos. Week on week, the PSE rose by 0.7%. Majority of the day's most active stocks ended in the green, with Universal Robina rising the most at more than 7%. Meanwhile, at the foreign exchange market, the peso is currently trading at 55.69 against the greenback, weakening from previous close of 55.63. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again next week as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News channel, always on top.